get to Bajaj Auto. The management is waiting by. The stock is doing well because earnings were better than what the street was anticipating. Margins above 20% for the sixth straight quarter. We have with us Rakesh Sharma, Executive Director at Bajaj Auto, now joining in. Thank you very much for joining in. This is Reema here. That's the first question, right, on margins. Can you sustain margins above 20%? What led to the margin performance in the current quarter? And even your EV portfolio has turned EBITDA positive. Where does it go from here?
Hi, good morning. Yes, the story for the quarter was coming in at fifth straight quarter of 20.2% EBITDA margin. And it's really driven by a combination of very judicious pricing being taken across the portfolio at regular intervals, as well as, the supportive softening of the rupee, which happened at a very good time from our point of view because of the expansion of the exports business in the quarter, where after almost 9 quarters, exports crossed 500,000 units or $500 million in terms of dollars. So, but there were forces which were downside forces, like, the mix changing a little bit because of the drop in exports to KTM, which were almost higher, which are higher priced. The rise of the Africa component of the business. But, all this put together, we were able to dynamically manage the margin architecture and deliver 20.2. Going forward, I think with the, as you mentioned, one of the best things which has happened towards the closing part of last quarter, and particularly now we will experience it, is the launch of a new platform in our electric business. And mind you, the electric business now is about 22% of our domestic revenues, so quite substantial. But that business now moves into the green zone because of work done by our procurement and R&D teams. We have been able to slash the costs in the electric business, and that moves into a green zone. The commodity basket, there are pluses and minuses, but overall the commodity basket is looking pretty stable. And with exports also looking like clocking the same tempo of growth, with the rupee at about realizations, in fact, improving further in Q4. We think that we have got a sound line of sight to maintaining our margins.
Okay, all right. Hi, Mr. Sharma. Good morning and good to see you, Ben. So exports will grow at 20% or?
Yeah, they have been, like we've been saying, that they've been year-on-year basis growing. At last quarter was 27% growth, and on the back of recovery in almost every region, led by, of course, as I've been saying, in LATAM. We think, and with our good positions in some of these key markets which are coming back to the growth story, I think we should be able to maintain this 20%. But we are watchful of the macroeconomic situation and the geopolitics of it, because a lot of the emerging markets, as you know, are quite vulnerable to any changes on that front. But for the moment, yes, we are planning for a 20% plus growth next quarter.
All right,
let's in Q4.
Let's come back home then. On the domestic front, the festive season demand seems to have got sustained. I think earlier you were guiding for around 6 to 8% growth in terms of the domestic industry. Do you think, going by the current data points, you could be maybe at the higher end, 8% could be assumed, or do you think it'll be closer to around 6%? I think the first half of the year, the growth was around 6%. How is demand trends on ground, basically?
Yeah, you're right. The first half, the motorcycle industry was clocking something like 6% growth. And it's really the 36-day festive period, which saw a massive upside, going up to almost 16% growth during that period, which has lifted the year-to-date growth rates to about 8%. To project any growth rates, it's better to not get distracted by temporary shifts, but to take a slightly longer shot view of things. And when we see year-to-date growing at about 8%, we feel that yes, 6 to 8% growth should be achievable by the motorcycle industry in financial year 25. But let me also remind you that that is almost similar to what the industry achieved in FY24. So we would say, yeah, 6 to 8% is what should unfold.
You spoke about headwinds in the form of KTM exports, and I think there was a 50% drop in KTM exports. When do you expect this issue to get resolved?
Well, the management of KTM AG is busy putting together a restructuring of the debt plan, supervised by the court, as you know. And there is quite a definitive timeline for that, which is 25th of February. By then, that is when the plan will be presented to the administering officer as well as the other stakeholders. And once that plan is accepted, I think things will start to get to normal, and hopefully the business can start getting restored in the subsequent quarters. The brand and the product acceptance and the demand continues. What needs to be done by the management there is to get the debt restructuring right and have enough liquidity.
And 25th Feb is when the plan will be presented by the KTM management. So while exports are seeing good momentum and you're confident that that will sustain, so 20% plus in Q4 as well, Nigeria's sales at 35,000 is still below your historical highs. When do you think you will be able to recoup that and get back to those levels?
You know, India business, the Indian industry has still not recouped its way back to 18, 19. So I don't know how useful these benchmarks are, because, yeah, it was 50,000 maybe 3 years ago. What we are looking at is quarter on quarter improvement. Yes, there is a potential in Nigeria, and we're very happy with the way the business improved. We've got a 55% market share there. So it's a very important market for us. But as you know, the currency is fragile. The situation has to be monitored month after month, and we are just taking it month and quarter by quarter.
Okay, all right. Let's talk about the other opportunities then, Mr. Sharma. And as you said, EVs as a percentage of domestic revenues, it's improved to around 22%. I recall first quarter was 14%, then 20%, then 22%. So good on you on that front. The other big opportunity could be e-ricks. Could you tell us about the launch out there? What kind of market opportunity does it look at, and which cities would you target? Because, you know, brokerages are quite positive about this launch and they believe there's tremendous potential. So spell it out for us.
Yeah, you're absolutely right. You see, what is this whole e-rick business has in the last 2-3 years almost crept up on the industry because of various reasons. And today, if I just look at the three-wheeled industry, three-wheeled rickshaws, not differentiating between autos and e-ricks, that's almost 100,000, and out of which about 45,000 per month is e-ricks. Now, a lot of these e-ricks are lead acid powered, which is, you know, something which is not good for the customer or the industry or the environment, and those are being phased out. And the lithium ion based e-ricks have started to enter. So we are talking about, you know, 45,000 units per month. They serve a particular use case. You know, they're narrower. There is their speeds are limited. Their seating, because of the structure, the seating is extra, and they particularly serve the customers in smaller towns and dense areas. And we are taking a aim at this market, building on the tremendous franchise which we enjoy with the customers and drivers and fleet owners with our Bajaj Auto RE business. So by end of March or early April, we will be presenting the Bajaj Auto's e-rick to the market. Mostly this business is in the north and east with parts of west, and we'll be taking an aim at organizing this sector, because a lot of it is very fragmented with substandard products, and we hope that we will be able to delight both the passengers and the owners with this presentation. We will have a product which is far more stable, which is able to go up, gradients far more successfully.
Right.
It has more durability, and will have a much superior powertrain, and the drivability will be far smoother.
Just a quick follow-up on this. So you're saying the e-ricks market opportunity or the size today is 45,000 units per month. What are you hoping to achieve, by the end of, say, 1 year post-launch? Do you have a number in mind? And secondly, your margins. Quickly, sir.
No, we don't have a number in mind as yet. Our first thing, as is always, is to present the product and ensure that it gets accepted, and watch out for, observe how it is getting accepted before we start scaling up. We have not yet come to the pricing discussions, even within our company. And as we come closer to the launch date, we will finalize the margins and obviously the pricing.
Thank you very much, Mr. Sharma, for joining in. Always a pleasure chatting with you. Look forward to the next